Welcome to Dad's DeFi Space. I'm Kevin, and I'm so grateful that you took a moment out of your day to spend it with me, your guide to all things crypto and DeFi. And again, thank you for joining today's live stream. This moment, today, this may be your last chance to load up before Altseason takes off. Now, I don't want anyone to start, selling their kidney to buy D-Genny altcoins right now, but wait till later in the stream and you will understand what we're going to talk about. So today's live stream is packed with tons of fresh alpha. So we got Ethereum beta plays. Many of them you've probably heard of, some maybe not. And my exact portfolio allocations and many of the moves I'm making right now, hint, and the video title tells you I am very ETH-Heavy. And we're going to go over some breaking news concerning foreign crypto exchanges in the US, especially perpetual futures like Weeks and Blofin, who we have been partnered with. And PYTH, if you took a look at, at crypto bubbles, has gone absolutely crazy today. 54% gains. Now, we're going to discuss why that happened. And then we're going to also take a look at stablecoin growth on AVAX, which has been, which has been outperforming Solana as far as liquidity flows and what that means. And then we're also going to dive into a few more aspects, we're also going to dive into some of our articles on Dad's DeFi Space. So everything we're going to talk about today is things that are going to help you prepare for a potential September to October shakeout, but also what we believe will be the breakout and the final phase of the bull run. Of course, I am not a soothsayer or a predictor, but this is just how I see the market now. So before we begin, please smash that like button. Tell me what you're holding in the chat, and let's jump straight into some charts today. Now, what I want to talk about first is take a look at Bitcoin. Bitcoin is sitting right now at about 112,500. We took a Bitcoin long and that we let our free Telegram group know at around 111 and 8, I think. And we are around, position looks pretty decent. We also took some other shorts, no, not shorts. We took another long in the market. And if you want to know what that one is, join our free Telegram group. Also, before we go any farther, remember that nothing on this channel is financial advice, and I am not a financial advisor. Please do your own research. Never invest more than you can afford to lose. So taking a look at Bitcoin, you can see all of my levels within the chart that we have been keeping up with. Right now, Bitcoin is basically still range bound, kind of between 110K and 124K. Now, just to get right down to my main ideas, I believe that Bitcoin and the crypto market is going to make another attempt at the all-time high. Now, I do not think we'll necessarily break through the all-time high, but I think we're going to at least get back up to 117, touch the top right here on the chart, or maybe even higher, 119.8 to 120K. If we get up to that point, I will be taking tons of profit on especially any longs that I have. And we're just going to have to wait and see if we can regain support on this 117,200 region right here. Now, I see, as I've been telling people within my groups and on my channel, that I still believe we're going to face a dip come September and October. And I am slowly positioning for that. That is why during any preceding pump that is about to happen, I am going to take profits. You should take profits too. It is the right thing to do when the market is pumping. And I don't mean selling out all of my positions, but having some dry powder on the side is never a bad thing, whether you're a trader, a DeFi investor, or just a hodler. Everyone needs some cash on the sides to take advantage of some of those market dips. All right. Anyway, I want to get a cleaner Bitcoin chart that doesn't have all these support lines drawn on it. Hold on one second. I'm going to just pull up the Binance chart. Now, what I want to take a look at is a couple indicators. And we're going to bring up the bull market support band, which is the 20-week simple moving average and the 21-week exponential moving average. Bitcoin tends to honor the bull market support band. Now, if you really want to know what Dad is going to be looking at towards the end of the market cycle, I am going to be looking at the bull market support band and the 50-week moving average. During the last couple of cycles, as Bitcoin hit the end of the bull run, we broke below the bull market support band right here, and it became resistance. Now, the end of the bull run, if you really want to take a look at this, and let's put the 50-week on here, and I'll show you exactly what I'm talking about. Well, let's do this one. This will be perfect. All right. So the yellow line right here, that's the 50-week moving average. We're going to zoom back out and go back in to last market cycle. Okay. Here was the exact end of the bull, November 8th. And we were FOMOing into positions we shouldn't have been FOMOing into, ruining most of the profits we made last cycle with Solana. The bull market support band did not break right away. It is very difficult to time the tops of the market. And that is why in this space, you have to dollar cost average out. So hopefully if you were around last cycle, you were taking profits here and here and here and here, maybe even here, 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 here. And if we still had not taken all of our profits and we're holding on, we were given a warning right here, which would be December 20th, right before Christmas of 2021. And we failed to break through the bull market support band. What do you notice? Right here, we broke below the 50-week moving average, and we broke below a lot. Not only that, after we broke below on the weekly, by the way, and I should have said that in the beginning, you have to look at these on the weekly charts, okay? On the weekly charts. Now, here in a minute, I'll take a look at the comments because I don't have them up right now if there's any in there. But what do you notice? The 50, right, which is right here. After we went below the 50 on the weekly and we attempted to get back up, we failed right here. We went down. We went back up and attempted to break through the 50 again right here, and we did right on March 28th. And then what happens? We fail to break below, or excuse me, above the 50-week moving average, and you get this. And even if you hadn't sold all the way out at that point, I mean, you were looking at about a 60% decrease that you could have avoided. The first dip after the bull being about 50%. And then we had a pump back up. It wouldn't surprise me if you see market movements like this again. So it can be extremely difficult to know when it's the end of the cycle. It's extremely difficult to time the top. It is not difficult to take some profits along the way. The lesson for today, ladies and gentlemen. Now, what I want to take a look at now is go back to the current Bitcoin chart, and we are flirting with the bull market support band, as you can see on the weekly. Now, I'm going to take the chart down to the daily. I'm expecting Bitcoin on the daily sometime over the next 20 to 40 days to tag the bull market support band, maybe even break below it a little bit. We have to keep an eye on this. Those guys out there telling you and screaming that the cycle is over, I would only believe them if I can see Bitcoin break below this, the bull market support band, and at the same time fail to get back above it. So these are just a couple indicators that you can throw into your bag and, make sure that you're keeping an eye on them. There's many other things that we can look at, but these are two that I believe are extremely important. Okay. All right. We're going to take a look at Ethereum, since that's what this video is mostly about. And we've talked about this a lot in the past, right? Ethereum is looking so strong right now, in my opinion. If I zoom in, even on the daily, you can see we have, watch this, on the daily, it looks really bullish. A higher high, a higher high, a higher high, a higher high, a much higher high, and even up here, higher high, and then we've been in a downtrend for a little bit. What I would like to see is that no matter how far we go back down, that we get another higher high at some point. Now, I will say this. If we get that September and October correction, if we get that correction, I truly believe that Bitcoin will start to outperform ETH again. Okay. So I can't predict the future, but I can watch the Bitcoin chart and the Ethereum chart. And if Bitcoin starts to dump and Bitcoin starts to struggle, I think that a lot of the altcoin market and Ethereum market is going to bleed right back to Bitcoin, just like it has been doing. That is why during this next pump, again, not financial advice, this is just how I'm playing it. I'm going to be taking profits, not all of my bags, but a nice amount of profit from some of my altcoins and definitely from my ETH. Oh, excuse me. During that time, I'll probably apply most of that capital just into some stable lending positions. Probably just simple using Aave and setting it aside until I'm ready to deploy back into mostly ETH and then probably some large cap alts and a few mid plays. That we're going to talk about some of those ETH betas a little bit later in the video. So be sure to stick around because this is going to be a little bit of a longer one today. All right. So Ethereum looking super strong. Much stronger than Bitcoin at this point of the market cycle. That doesn't mean that we're not going to bleed back to BTC. Ethereum has outperformed. We're going to take a look at that in just a minute. And you can't go up forever. It just does not work that way. We want to see at least some cool-offs and corrections in the market because if we don't, we're going to just have our blow off top now. I don't want that yet. The longer we stick around, the longer the bull market's going to last. And that tends to be what's going to happen within any market, whether we're talking about stocks, bonds, commodities, real estate, it doesn't matter. All right. Anyway, taking a look at ETH, I want to take this the moving averages off, and we're going to bring up a different chart, not the Ethereum chart. And this is my special chart because this is the chart, in my opinion, that's going to help you determine how strong Ethereum is and how close we are to the altcoin season that everybody has been talking about forever, including myself. And that is the Ethereum Bitcoin chart. So if you don't know this one, you need to put this one into your repertoire. All right, so this is the Ethereum Bitcoin chart. It's been on a massive downtrend, and I have been preaching to all of you all for months that the market will feel better once Ethereum breaks out of its multi-year downtrend, as you can see here on this chart. That's why I put the Ethereum snake right here. Once we can get above and stay above the 0.038 level, that's how much, Bitcoin per Ethereum. That means Ethereum is showing much more strength than Bitcoin. And if I zoom in on the chart, we've been showing strength since the bottom. And the bottom really was 0.017. And I'll be the first to admit that I was wrong. I started purchasing ETH around the 0.05 level, somewhere in between here. And we started going in heavy. And then what happens? This is why timing is so important in the market. We went in at 0.05 a lot and dollar cost average. And what are we doing? We're dollar cost averaging on the way down. If we just would have maintained in Bitcoin, we could have saved 60%, almost 70%, 68%. Sorry, did not see that right. But 68% all the way to the bottom. We would have been better off dollar cost averaging Bitcoin. Thank God we were farming our ETH and earning fees to make up for some of that. But the impermanent loss was ridiculous, right? It's something to think about, those of us who are playing in the DeFi playground. And it's also good for traders, because if you would have gone long anywhere around here, you were screwed. So this market can stay bearish way longer than you can ever imagine, and this market can stay bullish way longer than you can ever imagine. And those are things to consider when if we're going to stay around for the entire market cycle. So I'm going to be keeping big time eye on this 0.038 level. Stay marked on my chart. I have alerts on my phone. And I also am hoping that when an ETH corrects, we hopefully don't break down below 0.035. And then our lowest part is right in the middle of our downtrend, which is 0.03. As I said in the beginning, 0.03 is going to be ETH Bitcoin's line in the sand. If we maintain that, we're good. Other charts that you can look at to get a kind of a eye or a view of how close we are to Altseason are the total 3 index. Well, I want to hopefully we stay above the $1 trillion mark, but I don't know. We have been flirting with this quite a bit. The more you're not establishing good support above that line, and that's on the daily. I go to the weekly. I'm pretty sure it looks even worse, right? We could go back down in this range between 940 billion and 1 trillion. Oh, by the way, the total 3 is all of the cryptocurrency markets minus Bitcoin and Ethereum. Now, if you want to get real degenny, go to the others index. That takes out all the large caps, and you're looking at, well, not all large caps, but all the ones that aren't the big biggies. And as you get, well, let me take these old lines off the chart. I haven't looked at this one in a little while. If you take a look at the others chart, this is kind of like your degen season chart. I don't even know. We are above the bull market support band, but I'm expecting us to break support, at least on the weekly, or excuse me, on the daily. But if we get this big correction come September or October. Now, before we move on, let's take a look at some bull market signals. We do this every stream. Excuse me. I've had a terrible allergy attack the last 40 hours, and my voice, I apologize, it's worse than usual. Anyway, we're going to take a look. I don't want to look at this like I've talked about in the past, because the hold percentage is all of them. And some of these indicators have gotten a little bit to the high side, and I really would like to point them out today, because some of them have me concerned. And that's why, if we have this hopeful pump that should happen, hopefully, I would like to sell some of my large caps. Maybe probably some small caps too, for that matter. And we're going to take a look at some of those Ethereum beta plays in just a minute. But if you've been over on my webpage, you already know what we're going to be talking about. And if you want to get the information first, I would consider joining my Telegram group and private group on the website. That is the easiest way to get instant information from me. And then second, you can always follow us on X at CryptoZone1013, because I post most of my stuff over there also. Although I do have some news I'm talking about today that I have not posted on X yet. This is the one I really wanted to talk about today, though, is chart number 12, which I've talked a lot before, the altcoin season index. I've talked about it a lot, and I don't think I've gone in enough detail about a couple things. But I wanted to point out that we are 78% the way into you need to start selling because we're in alt season. That's actually pretty hot. And that doesn't surprise me, because Ethereum, and especially some of the Ethereum betas, have really run. Part of the reason I want to talk so much about Ethereum betas is because if we get this dip that I hope we get, you will have a good opportunity to get into the positions that you are most bullish on, that share a relationship to the Ethereum network. Now, understand that if you stay in beta plays and we have a huge dip, they are going to bleed more than Ethereum. So if your altcoins can't keep up with Ethereum, there's no sense really being in those altcoins unless you're earning yield other ways. Likewise, a lot of investors in this space would say, why be in Ethereum if Bitcoin is outperforming Ethereum? Something to think about. All right, but the altcoin season index, it does make me nervous. It being in the 78% range, people are concerned about a correction. It is something to think about. I want to point out this one. Short-term holder supply is going up. That means we're getting more retail investors, traders in the market. When this number goes up, the market tends to be way more volatile. Not always, but usually. So the fact that the short-term holder supply has gone up so much and is getting close to hit, that is a little bit of a concerning factor. But there's many others that aren't hitting just yet. Now, the CBBIS, which is their bull run index, that one's pretty high. So we're kind of half and half. That does make me nervous in the short term. All right. Now we are going to take a moment. Let me check, make sure there's no chats. Awesome. And we're going to talk about some of the news and events of the day. Okay. We got some good ones today. And this is what I wanted to start with. The CFTC, which is the Commodity and Futures Commission, they deal with all futures and commodity trading within the United States. They have clarified the FBOT rules, and that's awesome because clear FBOT rules mean exchanges that were in America and left can come back. And it also means that foreign exchanges could operate in America with clarity, which our government did not give many in the crypto space since the beginning. They've clarified these rules to expand global market access for U.S. traders, and they want to create a legal pathway for offshore exchanges. You're probably going to see a lot more apps open up where you don't have to use a VPN anymore. And we have a new partnership coming up very soon with a new exchange, so we should be able to offer some really, really good deals and rewards, but that is coming in the near future. And there's some good reward deals going on with Blowfin right now. So if you'd like to support the channel and you want to get into trading, be careful with your leverage, of course. Check out the link in the description. But the Commodities and Futures Trading Commission introduced these new guidelines, and this should help bring more liquidity into the markets. That means U.S. traders should have a broader access of crypto assets and exchanges to trade with. Now, talking about exchanges, I want to talk about an important rule that most crypto investors ignore. You must learn how to use a hardware wallet, and even if you're going to do DeFi, you're going to have to learn hot wallets also. But I never keep large amounts of capital on crypto exchanges except what I'm trading. And sometimes I use some on and off ramps to dollar cost average into certain assets, but I do not keep them on the exchanges. I don't try to earn yield on the exchanges. I withdraw and deposit those into my hardware wallets. The only money that stays on exchanges is USDC to move around, and any trading that I'm doing on Weeks, Blowfin, and the new exchange that we will talk about in just a few weeks. Now, I see this as bullish because it's going to bring more liquidity into the market. But let's move on to our next piece of news, which is PYTH. Now, we do have a small PYTH position. We're probably going to sell it out on this pump. Not financial advice, of course. But PYTH network has skyrocketed. If we go back to quick crypto bubbles, 54%. Look at that. That is a nice pump. Now, why did this happen? It skyrocketed because the government has given it the green light for on-chain data distribution. This is big. This means that economic data and on-chain data and American GDP is going to be put on the blockchain. This is awesome because it's going to be more transparent. And for those PYTH holders out there, that's awesome because you've gotten a nice pump today. I would take some profits, but that's me. The data feeds are already live across all of these other blockchains. So now this is bullish. You cannot have on-chain activity, DEX trading, DeFi, lending, liquidity providing, yield farming. All that stuff requires oracles. Oracles are Chainlink and PYTH. This is not a promotion of PYTH by any means, but I do see this as big news, and we are very bullish on Chainlink. Here in the near future, we're going to be coming out with a Chainlink deep dive. We are still very bullish on this one, but that'll be, if you want to read the article, that one is already on Dad's DeFi Space. Video coming out soon, so check that one out. Next, I wanted to take a look and have a discussion about stables and blockchain usage. This first article is Solana. Solana trader count has been plummeting a lot. This has been talked about kind of in the Memecoin trenches with pump.fun and other trading that's occurring on Jupiter through their aggregator or on Radium or Orca. Well, a little bit of Meteor also. Those are kind of your major dexes on the Solana network. Solana has always been known as the retail chain, and that's still part of our bull thesis with Solana, although we do think there's some other better plays right now in the market. But take a look at Dune Analytics in this chart right here. Solana DEX volume has drawn immensely, and you see this little tippy top right here? Do you know when that was? That is when Trump released his Memecoin, and what's happened since then. It's dropped, and it's dropped immensely. So is this a boom and bust cycle? I don't know. But right now, DEX volume has been dropping like a rock, and that's on Orca. So are they going to make a comeback? Who knows? But that is concerning. And that brings me to, if less trading's happening, what chains are the ones picking up most stablecoin right now? Because with stablecoins coming onto a chain, we can make the assumption that there's going to be more lending, there's going to be more trading, and that's usually a good sign. So it's something that you can watch. Stablecoin flows. And if you want to know where you can find the stablecoin close, you would go to DeFi Llama. Give me just a second. And I wanted to point this out because I haven't made a video in a while about DeFi Llama, which is an excellent tool, especially for DeFi investors, because you can pull all kinds of different analytics from tokens, from protocols, from chains, and it gives you a good kind of look at where everything's at. Okay. Now they have changed a lot of their webpage, and we're going to go into their stablecoin section. Okay. And I want to look at, well, first we'll look at stablecoin market cap real quick. So all stablecoin market cap right now is looking at about $280 billion. It's crazy, right? And there's been an increase of around 2 billion over the last 7 days. And what I want to do is change over, not to the market cap. As you can see, it's on a huge incline right now, but I want to take a look at stablecoin pie chart and get an idea of where most of them are located. We have obviously Tether, the biggie, USDC. Third, you got USDE, which is sort of an arbitrage on yield. It's kind of complicated. We're going to probably need to make an article on that in the near future. You have DAI and our algorithmic stablecoin, excuse me, so it's not backed by treasuries or any kind of real world asset collateral. And then a bunch of others. Now, the two biggies are USDT and USDC, right? And what I want to take a look at now is actually, hold on one second. If I can get this to load. This chart right here shows you stablecoin token flows. And if you look right here, you can see where most of them are going. USDE, USDT, DAI. Yeah, USDC right now isn't even really on the list. That's okay. But, hold on. Now, what I want to look at next, hold on. Chain overviews, hold on. All right. Let's see if we can pull it up from here, because this is everything pretty much. This is showing you which chains have the greatest amount of value locked, right? And as you can see, it's still Ethereum, which also still has the most amount of stable coins, right? But I wanted to take a look specifically at Avalanche. Now, the Avalanche blockchain, 2.85 billion. But one of the things I really want it to look like, let's see if I can put this on the chart. Yeah, stablecoin market cap. There we go. There has been a huge increase on stablecoin market cap on the AVAX network. A lot. 14% in 7 days. That makes me wonder what is about to happen on AVAX. Now, this could be a new DEX opening. It could be prepping for things with RWAs. It could be a bunch of people bringing over funds because they are about to go trading memes on AVAX? I don't know yet, but it's usually a good sign to see that much liquidity flow into a network. On AVAX, we're farming a an AVAX black pool. That black is the new DEX on the Avalanche blockchain. And then we also are doing a little bit of DeFi lending on Aave with AVAX also. So super bullish to see the stablecoin inflows coming to Avalanche. But what I wanted to show you, hold on. Let's check Solana stablecoin flows. We'll look at total value lock too. Let's put that back on. All right. So stablecoin market cap on Solana is still increasing, so that's not bad, but 2% compared to 14% over the last week. And that's a pretty big difference, right? Makes me think. Maybe we need to explore AVAX a little bit more. But again, not financial advice. It's just something that I came across over the last couple of days and got me thinking. So at this point of the stream, those of you all who've stayed around, we are going to get into our Ethereum beta plays and how to position for this final phase of the bull run. So I will put a link into the comments for our article if you're interested. If you're interested. This is the article for my Ethereum beta plays. I was published a few days ago. Excuse me. Now, I truly believe that retail is selling. Institutions, they are stacking ETH. And the thing is Ethereum flipped the script between Bitcoin and ETH. Which one is going to be the big dog? Thing is Bitcoin is always the big dog. Ethereum just gets to shine here and there. And I personally believe that it's been Ethereum's time to shine and that is going to continue probably until the end of the cycle. Although if we have any dips, profits do rotate back into Bitcoin. That is something to take into consideration. What's even crazy is we have a US president tied to ETH. We have BlackRock, a huge institution, tied to ETH. Don't know how I feel about that, but they're still tied to ETH. And the ecosystem is probably about to go parabolic. The thing is I think we can find where the gains are hiding by looking at Ethereum beta plays over the next bit of the cycle. Now, I've talked about this twice before, and I want to make an actual dedicated video to this. But ETH is the capital magnet of the entire crypto market. And we're going to talk about how to capitalize on this, okay? And most of this we've already talked about. But I still see Bitcoin as the market anchor. But Ethereum gets its moments. And over the last little bit, since Ethereum has jumped up in price, and this occurred back during the summer months, Ethereum pumped almost up to $5,000. ETH's strong performance paves the way for altcoins to outperform. But remember, whenever money starts to bleed back to Bitcoin, that means the altcoins bleed even more than Ethereum. Usually. Just something to consider. Now, I want to take a look at some of my favorite Ethereum beta plays. And we're going to just do this using our charts. But my first Ethereum beta play that I wanted to talk about is Link. Now, if you've been in the crypto space long enough, you know that Link is a oracle built on top of Ethereum. Okay? Chainlink, hold on one second. That is not what I wanted to pull up. Excuse me. Now, Chainlink is DeFi's data pipeline, right? So when ETH runs, Link runs, and Link had a pretty good pump since early August. In fact, since early August, Chainlink has pumped from the bull market support band to the peak 72%. That was a nice one. We earned a lot of fees. We took a little bit of profit, rotated back into Ethereum. It was a good one. But when Ethereum starts to outperform after this possible dip, Chainlink is going to more than likely outperform more than Ethereum. It has hundreds of billions of dollars of value locked into it. So I truly believe with real world assets like rising and people getting very bullish on real world assets, Chainlink's oracle is going to be even more vital. Also, with the increase in DEX volume and DEX trading, you need oracles in Chainlink and PYTH. Just something to think about. So one of our first tokens, ETH beta plays, Chainlink. Now, let's talk about our next one. Now, this one is probably the largest play that's going to be not as risky play as some of the others. This layer 2 network has been around for quite a while. We were investing last bull market a little bit, and that's Arbitrum. Now, the Arbitrum chart on the weekly does not look pretty at all, as you can see. Right? We had a pump that started back last November. We went from, 49 cents, 47 cents up to $1.23. That's 150% increase in ARB. ARB, when it runs, it really likes to run, but it has not been an outperformer this cycle. And at this point, we're just now getting back above the bull market support band and the 50-week moving average. So this is one that I don't have in our portfolio, that we don't have in our portfolio, but I do believe this will be a good play as an ETH beta for those who are less risky, not financial advice, of course. So it's the dominant layer 2 by total value locked. And we can go over to DeFi Llama. And if we go to all chains and look at the total value locked, we got to go back to chain metrics. Hold on. Here we go. All right. If you we look at total value locked, right? And it's divided into a lot of different market caps. You have Ethereum winning in both DeFi and bridged. Solana in second place right now. Binance Chain, Bitcoin, Base, Tron, and number 7 is Arbitrum. So minus Base, Arbitrum is the second largest layer 2. Now, and right below that, you have Hyperliquid, Avalanche, Sway, Polygon, Say Network, Linea, which is another layer 2, Aptos, Kronos, and a bunch of others. Okay? Now, what's interesting is the Arbitrum Orbit roll-up is going to help Arbitrum become multi-chain, or at least interoperable with other chains. This can be a catalyst event, but we're going to have to wait and see on that one. All right. let's move on to ETH beta play number 3. Which is one of my favorites. And this is a DEX that was built upon Base. You already know what I'm going to say, ladies and gentlemen. If you watch this channel, that's Aerodrome Finance. Aerodrome is the largest Base on DEX. It has an incentivized liquidity flywheel if you're willing to long stake your Aero tokens, where you are allowed a portion of the protocol fees, and you get exposure to Coinbase. As much as I dislike Coinbase at times, there's a lot of volume on this chain, and I don't let my emotions get involved, or at least try not to get my emotions involved in my investing. So the run on Base's top DEX, being Base's top DEX, I believe that Aero, being the reward token of that DEX, is going to have hopefully an alt season like Uniswap and PancakeSwap last cycle, and they ran hard. Because when people start trading for the more degen coins, a lot of them have to go to DEXs, and then that means the volume increases and they make more money, price goes up. Just something to think about. A lot of times money last cycle rotated from the layer, which would be ETH, Solana, AVAX, SWE, etc. And then the money flowed into beta plays and DEX plays, and then you get into smaller and smaller tokens. That is what everyone's talking about when they talk about the path to Altseason. Now, Aerodrome Finance has had a nice little run recently. Now we have taken a massive dip today down to $1.21. We took a wreck on a short. We did not share this one because I was not confident enough on it, and I probably should not have taken the play yet. But we're going to stay in this one. So I would keep an eye on this. If Aerodrome starts looking bullish again, I'm going to add to this position. But if you zoom in on the chart, we're heavily above the bull market support band, and we weren't not too long ago, just a couple months. And if we go to the daily chart, we're starting to break below our moving averages. So I'm keeping a line in the sand around $1.10, because if we break below this, we could easily revisit the bull market support band at around 90 cents. Now, what I want you to consider that is bullish about Aerodrome is Aerodrome just recently integrated with Coinbase. We read an article the other day that I shared on my X profile, maybe I can bring it up, about how volume changed after Coinbase integrated Aerodrome, and they only did this with 5% of their users. There were select users that they rolled it out with. Let's see. I must have only shared that in my Telegram group. I apologize, but the article basically said when they put 5% of their trading users on this integrated into the Coinbase's app, they had a 30% increase in Aerodrome DEX volume, and that was with 5% of a rollout. I'm very curious what's going to happen when they get to a full rollout. It makes me extremely bullish on Aero minus some kind of black swan event. And we're still farming this one on VFAT and hopefully going to take advantage of some of that price appreciation. For myself, this is not in a good accumulation zone, but if we revisit down to the $1.90 region, I probably will add a little bit more Aero into my position. All right, let's move on to our next Ethereum beta play. And we just published a video on this not too long ago. Check it out once you know what it is. But that one is Pendle. Now, Pendle Finance, it's had a huge dip recently, and we have just started to buy into Pendle over the last couple of weeks. So right around this area right here. This is not a token I've hold, but I have done a little bit of investing, trading yield on Pendle Finance, investing in YT to farm airdrops, and PTs for some fixed earn yield. We had a flywheel DeFi Solana strategy where we were able to earn a ridiculous amount of APR on our Solana. It was like something like 40-50% on a single pool position using Exponent, which is kind of Solana's version of Pendle. I should make a video about that one too. Let me know in the comments if you'd like to see a video on Exponent on the Solana network. But anyway, back to Pendle. Pendle Finance is a a protocol that allows users to speculate on future yield. In the traditional finance space, yield derivatives becomes extremely big in traditional finance. So as more and more people, especially traditional finance, come into this space, which I do believe the RWA narrative will bring more traditional finance in, Pendle will benefit from that. They are an RWA play using tokenized yields. It makes it highly compostable DeFi primitive. So in a yield-focused market, Pendle is going to earn tons of fees. And what's crazy about Pendle is their total value locked is way above the value of the token as far as its price, its market cap, etc., which that's awesome. It's like buying a stock that's worth less than its assets. And right now, Pendle, Euler Finance, and a few other DeFi plays, they're making money and yield for that protocol. And that's the way they sit right now. So Pendle, I have no idea what's going to, and it may revisit this lower range, right? It hasn't really been around enough, at least on Coinbase, to calculate the bull market support band. So that's probably not a good indicator to use with this one. But you see support around $4 on the weekly, a lower support around $3.24, and hopefully we don't break lower than that, because then we're talking $2.63. So we'll just have to wait and see. But I am going to start to stack Pendle. I have already, and but I have not updated that small position within my portfolio tracker. I'll have to update that one a little bit later. And that brings us to my final coin I wanted to talk about as an Ethereum beta play. Now, this one actually is a meme coin, and there's a reason I put it in here, because Pepe is the meme of Ethereum. This one had a massive run last cycle, as you can see. And if you take a look at the chart now, it's kind of been establishing a base between 8.9 and 1. So it's actually minus another dip, which could happen if Ethereum starts bleeding back to Bitcoin. If we get that correction everybody's talking about, could be a good time to accumulate an Ethereum beta meme coin. I am not. That's not a play that I'm going to take, but it's one that I wanted to mention. So Pepe, right? Not just a meme, but an Ethereum culture icon. It is a degen proxy for Ethereum bullishness. And when ETH rallies, the meme coin liquidity explodes. That means Pepe is going to explode. And it's probably the least risky on the Ethereum network. An argument, and excellent community. It's really involved. When the market gets hot, the Pepe supporters come out of the woodwork. So I wanted to put this one down as an Ethereum beta play. Now, it is heavily down since its peak in December 2024. So this coin could have a lot of bag holders, which is gonna create resistance right here, here. Definitely here is going to be a major realm of existence, which we haven't been back in that range since January 13th. Wow. That's a long time ago. Now, that wraps up the majority of my Ethereum beta plays I wanted to go over. Now, there are many others. And those of you all who stayed with the stream this long, I wanted to offer one more that I think could be a good play. It's a little more risky. And for those of you all who are still in the stream, you can consider this one, at least to do your own research. But this is one that we do have a position in, less than 1%. And that's Plume. Plume is another RWA play, tokenized real-world assets, and they've gotten a lot of institutional buzz. We're taking a look at the Plume chart right now, and it looks like we're trying to form a base around 7 to 8.5 cents. So anywhere between 7 cents and say 10 to 11 cents, I'm working on dollar cost averaging into Plume. Plume is on the Ethereum network, and I think a lot of institutions might take a look at this mid-cap play, and they've taken in a lot of total value locked during this price movement down. So I don't see this as a dead coin, although it has retraced quite a bit. Since the all-time high, this coin has retraced around 68 to 70%. But you see this with new projects. All the early investors cash out and look for better entries. So I hope the Ethereum beta plays have been quite informative today. And I'd also like you to take a look at the final part of the stream. So some of you may have been waiting for this. I wanted to go over my altcoin portfolio allocations. Now, I updated this a couple days ago, and you are looking at my coin stats. I'm going to move monitor, so give me just a second. We're going to take a look at my asset allocation. Now, one thing is missing from this. I do have some DeFi positions that will not show up on here. Some Ethereum, some Injective, and some Link that's on the Ethereum network are not showing. I also don't have my Plume or all my dog tokens on here. Dog is a rune on the Bitcoin network, kind of a meme coin play. It runs when Bitcoin runs. It's a Bitcoin beta play. But I wanted to take a look at some portfolio allocations, okay? Now, biggest position right now, minus Bitcoin, because not all the Bitcoin is being shown within this, which would affect some of the percentages, but you'll get the idea. I'm around 30 to 35% Ethereum right now. Now, some of that ETH is being lent, some is it within liquidity pools, and a ton of it is just in cold storage, right? And that would be this 2% here, and then some of my AVE, loaned out ETH, the A wrapped ETH. This is a token that represents what I've put into the AVE protocol. And then we're taking and farming yield with what we borrowed off of that. And then some of it actually has helped to establish some smaller positions. So the majority of our portfolio, we're talking 50, 60% is in Ethereum and Bitcoin. This is the smart way to play it in this space. Most people come in, retail investors, and they're going to get heavy into your altcoins, and they are probably the most risky investments any of us in this space are taking. So let's get to what more people want to talk about. We're going to take a look at some of my allocations. We've already gone through Ethereum and Bitcoin, but I want to talk about some of the others. Our third largest allocation in our portfolio is Solana, the chain of retail, as we said earlier. And the Solana token is going to be a layer one that's probably going to stay with us, whether people like it or not, because it does get a lot of hate and shade in this space. But it's always has a place within my portfolio. It's great for lending. It's great for farming. You had the early Memecoin trenches. It's starting in RWA, starting to pick up on Solana. Check out our video on tokenized stocks and how you can build a stock portfolio on top of Solana, and also how we can farm liquidity with stocks, which is crazy because you cannot do that within the stock market without being an institution pretty much in America. So that is what I like about RWA and DeFi. It opens up markets for small players in retail that we were never allowed to play in. Next, our fourth biggest position is Sway. I'm super bullish on that. In fact, we're even considering adding more to this one. I'd like to get it up to 10%, which is crazy. I want to consolidate a lot of our crypto positioning into the large cap alts. Okay. Next, we have AVAX at 4%. And a lot of that is because the position has built up DeFi or lending and looping on Aave. We do owe some of the loans. So once we pay that back, this will not be 4%. We're looking at probably 3 once I pay off the loan. We have ADA. Next, this is left over from last cycle. It's earned yield. We were farming SNEC and what was that other coin we were farming? It was a gaming play. Cornucopia? Yeah. That I'm not in that. That was from a long time ago. But it earned really good yield. It built up our ADA position. I'm just kind of holding on to it. I may sell and allocate that capital elsewhere, but right now it's just going to sit there. It's around 2.6%, which is basically the same as our Ondo position and RWA play, tied to Trump, tied to BlackRock. This one will run when RWAs run, and it's not as risky as one like Plume. We have Injective, another layer one. This is kind of the everything chain. Now, I would like to see more total value locked on this chain, but it's fast, it's cheap. I do believe it will run with others in the space, and that's Injective, 2%. Then our Link position is about the same as our Injective at 2%, although some of this position is in hardware wallets, some of it's on the Arbitrum network. And then we have our Ethereum mainnet position, although we are farming some of this on Pendle. Farming the Terminus airdrop, but we're providing liquidity for a Pendle LP. I made a video on Pendle Finance where I talk about that if you watch it till the end. Now, this is a new play. We've been accumulating TAO since our last market dip. I have a deep dive article on TAO that's on Dad's DeFi Space. I would love to convert this one into a deep dive video. I've not done that yet, but we will. And we also have an upcoming video on DeFi Tuna, which is an awesome LPing aggregator. And you kind of like revert because you can leverage your positions on there. And that one, where is it? I'll tell it's farther down. Here we go. Not too far. No, that's Aerodrome. Excuse me. I have an Aerodrome deep dive too that you can check out. I'll put that one in the comments also. Hold on. There we are. Here is the Aerodrome article for those who are still on the stream. And then we're also going to take a look. See, here's the Tau subnet articles. They're not really articles. It's more of charts of all the different Tau subnets, just so you can know what their thesis is, what they're doing, which ones are most valued, and APRs, stuff like that. But anyway, you can check those out if you want to join. But this one right here is my deep dive on Tau. Check that one out if you're interested in AI plays. Now, Tau is kind of like AI infrastructure play. All the subnets are basically different AI plays trying to add value to the Tau network. Tau mining, it comes from the subnets that produce the most value, get the most Tau tokens. So we're going to take a look at the rest of our portfolio. Now, again, would like to take a look at, yes, and I know you don't see it right, and that's because I have some of this wrapped up in DeFi, I have some of it wrapped up in lending, and I have some of this actually wrapped up in liquidity pools, DeFi, looping, some YPs, LPs, Pendle. But anyway, I'm going to get back to the tokens because that's not what this part of the video is supposed to be about. So a little bit more caffeine needed. Now, the Tau token, AI infrastructure play, super bullish on this one, but I've just started dollar cost averaging over the last few months. It's only about 1.6% of my portfolio, which is about the same as World Mobile Token. Now, this one has not performed very well. We're just hodling it right now. May buy some more. I want to see some more catalysts first. We have 1%. And World Mobile Token, by the way, it began on the Cardano network. It's now multi-chain. It's a decentralized data network. So think cellular data, cellular phones, but decentralized. They do even offer cell phone plans and stuff right now. Something really cool you should check out. World Mobile Token X. Next, we have Render. This is another 1% token. Now, Render is a compute play. We also have a good amount of Aether token, which would be in the others, which I can't pull up. I'll talk about which tokens are in the other tokens that are in there kind of towards the end. This would lead us to another GPU compute play like Render, although Render is mostly for graphics, AI. Aether is straight up AI. Now, it originally started kind of as a gaming infrastructure play, but they've gotten deeper into AI, rendering, GPU compute, CPU compute, GPU compute, excuse me. And they're actually making money right now. So I wish I would have jumped on their node sell. I think that would have been a good one. But we did not. It's just one we've accumulated throughout this market cycle. 1% of our portfolio. We're hodling it right now. Next is Big Daddy Doge. Now, Dogecoin is the original granddaddy of all meme coins. It gets pumped by Elon Musk occasionally. It used to be about 2%, but we've been dollar cost averaging out of this one, actually, every time it pumps. Our next one is Virtual. Now, our Virtual position is quite small right now. We have lent a lot of it out on Moonwell Protocol. I'm not as bullish as I was, but I'm still holding this because I am bullish. I am bullish on AI agent plays, and Virtual is kind of the daddy of all AI agent plays. And that brings me to Near. Now, this position is a lot larger than 0.63. I'm staking most of it. It's probably close to 1.5, probably a little bit below Town World Mobile Token. That is Near Protocol. It has not been an exceptional performer this cycle, but it's still a fast chain. It's still activity on the chain. They're trying to reposition into AI. That's kind of what I'm wondering about over the next little bit. Now, let's take a look at asset allocation now that we've been through most of our plays. By the way, this other part, which is around 1,600 of the portfolio, this would include small cap plays, meme coins, just tokens sitting in my wallet, and everything else. So we're not going to really go over these. And some of those are too ginny for me to really put on my channel. But I wanted to take a look here. Now, these are asset allocations, right? Really need to be a little bit heavier in my stable coins, but a lot of my liquidity pools are 50-50, full range, some of them, and stables. That means half of those positions are stable coins. I'm also have stable coins lending out. But you can see that it's layer ones, Ethereum ecosystem, DeFi, a little bit of meme coins, AI, layer two, not a lot. Stablecoin, and but by the way, most of my layer two positions are stacks, a layer two on the Bitcoin network, and immutable X. Those would have been within my others of the last one. I have NFTs, they're not worth that much anymore, and others are just a bunch of random tokens that are sitting in my wallets, right? Dust is what we call that. So I hope this has been an informative part of the string, just giving an idea of some of my portfolio allocations and also my DeFi plays. I want to go back, take a look, and show you a little bit more of Dad's DeFi space and our free Telegram group. Now, within Dad's DeFi space, we have all kinds of articles, free DeFi course that you can join, free. Now, these courses are mostly articles and then a few video tutorials that will give you guidance on how to get started. If you go into our education section on our website right here, you'll see our beginner's course to cryptocurrency and DeFi investing. You just click here. There's some participants participating right now. And we also have Dad's group. Now, Dad's group is where I post content after it's in a Telegram group. Now, this used to basically be the private group, but we're building this out still and talk strategy. This is a DeFi tuna strategy. Post guides, videos, and then every once in a while, I post some trades and updates on this part. Now, what I wanted to look at next is our free DeFi group. Now, I'm already in it right now, and you can see this was the live stream post. Sharing some new altcoins that I've been researching. These are micro caps, very, very, very risky. DeFi tuna range, leverage trades that I've gotten into recently. Vault checks that before I post them on X. This was a little bit of our Yeezy short. As you can see right here, we got stopped out. Gosh, where was that? Before we hit, well, we hit 0.74 and then got stopped out, and I didn't really re-enter after that. How to earn, these are videos that get posted here first. I put my notes, my weekly DeFi pools before they're published, and much, much more. We've been discussing developing a trading group, although that is in the works. Right now, I'm just posting my personal plays. And I just want to show you what is coming up and some of the things we have coming up just in the next month or so. So I hope this has been an absolutely informative stream today. I hope you've gotten a lot of alpha and learned some things. Please support the channel by liking and subscribing. Share our content with those who need a little bit more knowledge in this space so they're not left holding the bag at the end of the cycle. Check out some of our affiliate links, especially if you want to help support the channel. We can trade with Weeks and Blowfin. It gives us a little bit of support, and you can get some USDT rewards when you sign up and trade. Also, if you really want to consider upping your DeFi game, you really should consider checking out the UIG Underdog Investment Group with Crypto Labs Research. They're getting ready to come out with a new DeFi tool called DeFi Buddy. It looks extremely interesting. I'll make a video about that one in the near future. And if you use our links in the description, 20% off your first month, $50 USDT if you'd say you came from Dad's DeFi space. And that's for you. I'll get a little kickback too, but that's part of being an affiliate. We like to be completely transparent on our channel with our sponsors, with our affiliates, and with our trades. And you're not going to get that with most channels in this space. So until next time, ladies and gentlemen, be sure to take some profits this cycle. That is advice at some point. You don't just want to hold your bags forever. And go out and touch some grass. That's what I'm about to do. So thank you. And until next time, ladies and gentlemen, peace.